What's going on, everybody? Welcome back for a new episode of Wall Street Porn. Today we're going to take a look at the recent move higher in Priceline, which ironically took place on a Friday. A lot of her moves recently have been taking place on Fridays. And as most of you know who play weekly options, Fridays can be pretty awesome because of the low premiums you'll get in out-of-the-money options. We actually aired a previous episode on Priceline about 8 months ago, and that was some really big money on the breakout from $500 and it went all the way to $700. This was the initial breakout. So if you guys really want some quality Wall Street porn, I suggest you check out episode 9 after you check this one out. Okay, but let's go ahead and get into this recent trade on Priceline. This down here, you're taking a look at a 3-month chart of the action in Priceline. As you can see, it kind of consolidated under 700 for a while. A lot of price targets came out, $750, $800. And then the Q2 earnings came out on August 7th, and the stock got absolutely obliterated on shitty guidance, I believe it was. And she's been trying to get back through this gap since August. And recently, in the past couple of weeks, she's been able to break through 600, break through 610, and start pushing through that gap area. But I do want to mention that this move higher has not been easy at all. And you can see that by looking at a 10-day chart a little bit easier. Okay, so you see all these moves higher. She'll make a move higher and then kind of sell back at the end of the day. And then it'll look like she'll make a breakout and then kind of just push back the next day or the next day after that. So it's not easy to just hop into a weekly option or a monthly option, get a good cost on this thing, and hold through a lot of the nonsense. And even on Friday, as you can see, she barreled higher to 645 and then tanked to about 637 at the end of the day. So whether you're playing the weekly options or monthlies here, this is not an easy hold on the option. So now let's go ahead and take a look at an even shorter time frame. Let's take a look at the intraday action from Friday. Okay, so you can't really see the pre-market action here, but she actually gapped up this morning about 3 points. I mean, we've been waiting for it to sort of break the 626, 625 area and then start really just pushing towards 650. So she opened at about 628 and then just ripped right off the open to like 632, 633. And then this consolidation right here is when we started to pick up the option that we went after for this particular trade, and that was the 635 weekly call. So that was about, strike price was right around here, and I was basically assuming on a pretty big rally up to 640. That was where I was thinking about taking profits. So I started picking up that 635 weekly call right here at around like $1.50 to $2, more like $1 to $2. And then once this rally took place, that option just started shooting towards the moon here, and then once it broke 640, you saw a ton of market sweeps just coming in this thing and taking it up to 645. So the option got pretty pricey and went up in value very quickly. Let's go ahead and take a look at that. Right up here we have a chart of the 635 weekly call, and as you can see, this short time frame here was that consolidation that we were looking at from around 930. Or I should say like 940. Take a look back down here. This consolidation right here, that basically was basically the short period of time that you had to get a good cost, a cost under $2 for this option, and then just to try to get your last bits under $3 before this thing just took off to the moon. I started piecing out around $6 all the way up to $8. She hit about $9, $9.50 at her high. Had a nice pullback and then went to new highs on the day. Okay, so now let's get to the juicy stuff. Let's talk about the money you could have made on this option, keeping in mind that it happened very quickly and you did need to be very on point with your entry and your exit because you can see how quickly this thing just dropped out in price, even off the first rally at 10 o'clock in the morning. You can see this thing went from almost $10 all the way down to $5. So it lost 50% of its value and then climbed back up. So there's room here for two trades, several trades, but that is provided you understand how Priceline moves, how the spreads move, and how quickly you need to react to the option. But enough of that. Let's go ahead and talk some money. I got in at an average price of about $1.50. And was able to sell from $6 to about $8, so let's say an average sell of $7. Let's go ahead and talk about the money. Now, I only got 125 contracts. That's all that I was able to pick up. So let's talk about my trade and then what should have happened. So 125 contracts at a cost of $1.49, and you get about 18,625 bucks. That's how much you spent to make the trade. And then you're taking those 125 contracts and you're selling them at $7 for a total sale of 87,500. So your total profit equals 87.5 minus 18,625, and that gets you 68,875 bucks. So this is what I pocketed on the trade, but if we take a look back at this chart real quick, you can see the volume down here at about 2,000 contracts for the day. I was a little bit gun shy. I could have paid up for these options when I knew that move was coming, and I was a little bit gun shy. I didn't pull the trigger. Again, Priceline spreads are pretty crazy, so you got to buy the offer like 20, 30, sometimes even 40 cents up, and sometimes you just don't have the balls or the conviction to do it. And I definitely was a bit gun shy that day and only got 125 contracts, where I should have gotten at least 200, maybe 250, even 300. And you guys definitely would have seen a nice profit of $150,000 to $200,000. But regardless, this was a good 3 times, 4 times your money trade. And this is what we do here. This is Wall Street Porn. Hope you guys enjoy the video. Make sure you check out our other episodes of Wall Street Porn. And happy trading.